makers and market movers. This is The Pulse with Francine Lacqua.
Good morning and welcome to The Pulse. I'm Joanna Bersachi in Dubai, in for Francine Lacqua this week. Now, Nvidia has signaled that the two-year AI spending boom is decelerating, with a sales forecast that fell short of the highest Wall Street estimates. It's expecting revenue of around $54 billion in the third quarter and has removed China from its forecast altogether as tensions remain over sales of its H20 chips. So the latest after-hour trading activity suggests that the stock is poised to open down 2%. It was 3% earlier on in the session, so pairing some of those losses, as you can see. But the chief executive, Jensen Huang, says he still hopes to sell Nvidia's most powerful chips into China.
So I think the opportunity for us to bring Blackwell to the China market is a real possibility, and so we just have to keep advocating the sensibility of and the importance of American tech companies to be able to lead and win the AI race.
Let's bring in Robert Lee, senior analyst at Bloomberg Intelligence. Robert, there are not that many companies in the world that are seeing their quarterly revenue sales growth expand by 56%. These are still very high numbers, and yet perhaps not enough to satisfy what investors were looking for.
No, absolutely. So I guess let's briefly go back to the ABC of stock markets and broking. Short-term stock movements, particularly on results, are driven by incremental surprise or lack of. And that's what we didn't see last night. There were solid numbers, largely in line with expectations, maybe slightly ahead in terms of what was reported and what was guidance. But I guess investors have got used to this sort of diet of so-called beat and raise, where the company's been, substantially beating numbers. That just didn't happen last night. So I think the setup was pretty textbook. The reaction, again, was straight out of the, as I said, the ABC of broking. It's unsurprising we saw profit taking on the back of what were a solid set of numbers, but with no massive incremental surprise.
Yeah. Rob, all of this week when we've been previewing Nvidia, you've been using the hokey-cokey analogy of one leg in, one leg out, and it really appears to still be the case for Nvidia. One development that really stood out to me from the earnings yesterday, they didn't sell any H20 chips into China in the last quarter, obviously due to some of the geopolitical tensions. How do we see this panning out in the coming quarters, and could that pose some upside surprise or a tailwind to Nvidia in the coming quarters if they do start selling that chip into China?
Okay, sure. Well, you don't want the Robert Lee hokey-cokey, so I'll give you a clear answer. I would say, on balance, it's highly unlikely the company's going to sell H20s in China. It's just clouded by a lot of geopolitical-driven uncertainty. Obviously, America and the US are major economic rivals, geopolitical rivals. China's pushing strongly to achieve technology self-sufficiency. As I've said previously, from a Chinese perspective, America is an unreliable partner. So there were unconfirmed reports that the Chinese authorities are encouraging companies in this part of the world to buy locally. So I think it's highly unlikely the H20 will go ahead. But I think the major takeaway from my point of view on the results was the clip you gave from Jensen then. I think they've maybe changed their strategy a little bit on China. It's evolving. They're potentially looking, and I assume they're lobbying President Trump and his administration to get permission to sell the more advanced Blackwell chip into China. So I would say from a corporate point of view, I'm sure in theory the Chinese companies might welcome that. What the Chinese authorities and regulators would think of that remains to be seen. So I think that's the way the strategy is evolving. But I would say, based on what we do know, it's highly unlikely at this point that H20 will be sold into China by Nvidia.
Yeah, and let's see what upside that actually does bring in terms of revenue. Robert Lee from Bloomberg Intelligence, as ever, thank you so much. Well, joining us now is John Bilton, head of global multi-asset strategy at JPMorgan Asset Management. At the top of the show, John, I was saying that Nvidia itself, a single stock, represents 8% of the S&P. So you can see why it is so important for market momentum in the next few days. Is there anything that you took away from the earnings report yesterday that should or could slow down the recent positive momentum we've seen in U.S. stock markets as of late?
Well, I think with the market, we have to take a bit of a step back because, there is concentration in the US market. And of course, the US is concentrated within global markets. But if we actually look at where the market capitalization of the top 10 stocks in the US is, it's sort of in the middle 30s. But the earnings contribution there is in the upper 20s. So this is not an unjustified position for these block of sort of mega cap names within the US index. They are, to use an expression, very much washing their face in earnings and in cash flow terms. Add on to that they are, that many of them have dominant buybacks going on, and you can see why it is that they are so important to the index.
Mm-hmm. And it's not just that driving it, but perhaps also interest rate cut expectations. And in that regard, the Fed Chair Jerome Powell's speech at Jackson Hole was quite notable last Friday for its dovishness. Do you expect the Fed to embark on a series of sequential rate cuts, or do you think it will be maybe one in September, then sort of reassess the outlook before committing to further interest rates? How do you see this all panning out?
Well, I think that the Fed are, we talk about data dependency a lot, and I think that comes in and out of fashion. But the Fed, more than any other central bank, probably are data dependent. We've heard some sort of mixed signals. I think it's pretty clear now to us, and we expect a rate cut in September of 25 basis points, another one in December, and then a couple more next year in the first half. We would stick with the idea that it could be quarterly, but John Williams, of course, the governor of the New York Fed, has said that every meeting's live. What he also said recently was that the policy at the moment is modestly restrictive. So that means they can cut and still keep in balance both their employment mandate and their inflation mandate. And, at the moment, I think some of the dovish comments that we saw out of Jackson Hole really point to the fact that they are perhaps slightly more focused on labour markets just now. But make no mistake, they are still aware of the elephant in the room, which is inflation risk.
Yeah, and a lot of that is just so uncertain at this point in time. It's very difficult to see the actual real economic impact so many of these policies are going to have. But let me just ask from your standpoint, your perspective, we have seen a big steepening of the U.S. yield curve as of late. Do you have a view of where 10s should end up, what approximate fair value is? And again, we are possibly entering into uncharted waters. Also on back of some of the recent jabs that the president has made towards the Fed as well and the Fed's independence.
Yeah. Well, look, we do expect that curves can steepen from here, but it's much more along the lines of the very long end where we're pricing in some of that inflation uncertainty into the 30-year bond. And we saw a little bit of that during this week as we've had some of the rhetoric back and forth between the Fed and the White House. And, of course, even as we saw the 10-year note rally, we saw the back end of the curve, the 30-year point, selling off a little bit. So that steepening between the front end, the 2s, and the back end, the 30s, is something we're keeping a watch on. In terms of where the 10-year note sits, we've seen it behaving extremely well, actually, despite some of this rhetoric going back and forth. We think the fair trading range at the moment is somewhere between 3 3/4 and 4.5. So at 4.20 in the 10-year note, it feels like it's pretty much in the middle of the range. Now, if we do get those cuts at the front of the curve as we expect, that's going to have a gravitational pull on the 10s. But as we price in a bit of inflation risk, then that's going to lead to that bullish steepening of the curve that we'd expect to see. And that's something which we would expect to weigh on the US dollar over the course of the fourth quarter as well.
Yeah, and, let's talk about a central bank that President Trump has been paying a lot of close attention to, and that is the ECB. We're getting some commentary now from Olli Rehn, one of the ECB policymakers. Let me just bring you a couple of those lines. He's saying there's no reason for complacency. We must be alert. Inflation for now is in a good place. He does not think that an insurance cut is needed with inflation at 2%, but they do maintain full freedom for maneuver. Obviously, I should mention here he's one of the more dovish members of the committee. And on independence, he's just saying that the principle of Fed independence is being undermined. Let me ask you a question about the ECB. I think the assumption out there is that they're pretty much done with their easing cycle. If you look at what's priced in, you have to go all the way out to Q3 of next year to get a full interest rate cut priced in. Is that valid in your mind, given some of the perhaps disinflationary pressures that are going to come through to the Eurozone on back of these tariffs?
I think it's reasonable for the moment because we haven't really seen the full impact of the tariffs coming through yet, whether it's in the States in terms of how much they've collected at the border or whether it be the impact on earnings and data such as inflation over here in Europe. So I think that still has time to play out here. But I would draw the distinction that policy in the Eurozone compared to policy, whether it be here in the UK, whether it be in the US, is definitely on the more accommodative side. They're pretty much in line with where the balance of the ECB board want to see interest rates. And remember, next year we've got significant fiscal thrust beginning to come through across the Eurozone, beginning to reverberate out from Germany. And make no mistake, the outlook for the Eurozone has topside risk because of relatively easy and stable policy, but also the room to be able to do this fiscal push, which together we think can really push European growth to surprise possibly to the top side over full year 26 and full year 27. So against that backdrop, I think the ECB being in a little bit more of a wait and see mode is probably appropriate. Yes, there's a disinflationary impact of tariffs because, frankly, it just leaves a goods overhang in countries outside the US. But, of course, there's all this good stuff from fiscal to come. And I don't think the ECB want to be caught napping, cutting rates and then suddenly having to push them back up again.
Okay, interesting. You're pretty bullish. What about the elephant, or I should say elephant in the room, which is France right now? Again, the politics are front and center. Are you not worried about the perhaps more broader systemic impact some of the political gyrations in France could have on the rest of the Eurozone?
I'm always worried about politics, but at the end of the day, that's just a matter of life when it comes to markets. A lot of what we try to do is separate out the signal from the noise here. Remember, in the Eurozone, there are 19 countries, all of them with a 4 to 5 year election cycle. On average, you're getting an election once a quarter. So if we get hung up too much on one of them, then I think we miss the general move, which has been towards some, the fiscal improvement in Europe, relatively low rates environment, the beginning that we're seeing in terms of the turns in economic data in places like Germany, the ongoing strength in places like Spain. Sure, there are issues. I'm encouraged by some of the commentary to try and repair and avoid a snap election that's coming out today. But generally, I think we have to accept that this is just going to be background noise across the Eurozone, as just a matter of life. So I would look through at the economic data and the opportunity for growth to expand across the bloc as a whole.
John, really lovely to talk to you. Thank you so much for coming on the show. John Bilton, Head of Global Multi-Asset Strategy at JPMorgan Asset Management. Well, it's not just Nvidia, everybody. There are other corporate earnings that we're keeping an eye on. Pernod Ricard shares have gained as much as 8% after reporting sales that topped analyst expectations. The company expects overall sales to improve towards the second half, with average growth between 3% and 6% from 2027. For more, I'm joined now by Bloomberg's global business reporter, Jennifer Creary. It's interesting because Pernod is one of those stocks where people perhaps had such low expectations. The bar was pretty low for a beat here. What did we learn from what they released on the earnings this morning, especially as it pertains to sales in both China and in the U.S.?
Yeah, exactly. It's definitely surprised the market. So for Q4 sales, there was a beat. It was fairly flat. It was better than the 0.8% decline that analysts were expecting. And for full year profit, there was also a beat. Unsurprisingly, there's still a bit of weakness in China and the US. In China, organic sales were down 21%, and that's due to softer demand, the impact of tariffs, but also the removal of duty-free cognac sales. In the US, some of that weakness, of course, is due to tariffs as well. One interesting line from management today is some bullish statements on the outlook for global travel retail with the resumption of duty-free sales and that in China, and that's expected to come into effect in Q2. So looking ahead, in Q1 of this fiscal year, the company is expecting there to still be some weakness, but a lot of that recovery will be weighted towards the back end of this year. So things are looking up for the company, and you can see that reflected in the share price today.
Yeah, most definitely up almost 16%. Thank you, Jennifer Creary. Speaking of stocks, I just want to bring you some lines that we got through on selling that's taking place in Hong Kong stocks. But this is interesting. Investors in mainland China, have sold a record 20.4 billion Hong Kong dollar. That's $2.6 billion worth of Hong Kong listed stocks on Thursday, today. But the read is that perhaps this means some of those investors are actually returning to the local market and investing back onshore again in Chinese equities. And as we've been talking about the last couple of weeks, Chinese equities are in the middle of a $1 trillion rally. So there you have it. So some of those liquidity metrics coming through this morning, selling coming through from mainland China on the Hong Kong Stock Exchange. But then also bear in mind there was a bit of a negative impact this morning from Meituan, which pulled down the overall index. That stock was down about 10% today in trading. All right, coming up, after 5 years of tensions, China and India draw closer in the face of Donald Trump's trade war. But who was it that made the first move towards repairing their damaged relationship? All the details next. This is Bloomberg. The Indian Prime Minister Narendra Modi will meet the Chinese President Xi Jinping next week as the two countries put aside tensions that had been simmering for years. Now, Bloomberg now understands that it was President Xi who made the first move towards repairing their damaged relationship by writing a letter to the Indian president back in March. It coincided with the U.S. president ratcheting up the trade war with Beijing. Joining me now is our chief Asia correspondent, Rosalind Matheson. This is such an interesting story and perhaps speaks to one of the byproducts of Trump's trade war, essentially bringing these partners who had been somewhat economic rivals closer together, Roz.
Well, that's right. So there's a long history of tension between India and China, and trade is part of it. But also there have been long-running border disputes between the countries that flare up quite regularly. China supporting Pakistan, which India has not looked very good, as you can imagine. So there's a lot of underlying tension there. But there have been equally efforts over the years to patch things up, you know, in 2023 and 2024, but they didn't really go anywhere. And what seems to have been the catalyst, as you were saying, is their mutual interest in the US, and that's Donald Trump's trade wars, trade tensions with countries, but also particularly of late zeroing in on India, really criticising India for purchasing Russian energy, you know, giving China a pass at the same time on it. But really the relationship between the US and India has deteriorated, and so there's a mutual interest for China and the US to draw closer and to paper over their differences, at least for now. And so what we're seeing is some tangible signs of that on the trade front, on the business front, and most of all, you know, with Narendra Modi going to China in a matter of days to sit down with Xi Jinping. The question is, in all of this, can that thaw last?
And not just Prime Minister Modi, China's also courting North Korea, with Kim Jong-un also set to attend a military parade in Beijing on Wednesday. How significant is that?
Well, that's also significant when you look at the way that the chessboard is moving here, because you're going to have the leader, you know, of the Russian President Vladimir Putin also in China at the same time. Now you've got the North Korean leader saying, I'm coming along as well, you know, and China has been a little bit on the sidelines with North Korea of late because the relationship has really been deepening between North Korea and Russia. So China, maybe this is a chance to get back there with North Korea, but it's also for them collectively to show some unity of sorts against the US, because Donald Trump has been floating the idea in the last few days of, at some point, could he have another meeting with the North Korean leader? Of course, he had two summits with Kim Jong-un. The first one was fairly successful, arguably. The second one didn't go particularly well, but suddenly he's saying maybe he wants to have a conversation with the North Korean leader. So it's actually quite good from the China perspective for them and Russia to be hosting him at the same time next week. But it'll be interesting to see what conversations emerge tangibly once they're all there at the table together.
Yeah, no doubt President Trump will be watching very closely. Bloomberg's chief Asia correspondent, Rosalind Matheson, thank you so much. Okay, let's get more on a Bloomberg scoop. We've learned the Mexican government plans to increase tariffs on China. as part of its budget proposal next month. The move would protect the nation's businesses from cheap imports and satisfy a long-standing demand of U.S. President Donald Trump. We're talking to Bloomberg's trade czar, Brendan Murray, right now. Brendan, for once, it's not the U.S. that's the source of these tariffs. Now, according to our own reporting, it's Mexico looking to apply tariffs on Chinese imports. What's the rationale behind it?
Well, if this goes through, this really would play well in Washington. Mexico is trying to walk a very fine line between its protectionism against Chinese imports and maintaining some sort of ties with Beijing economically. So there are a lot of concerns in Washington that Mexico has been a backdoor for Chinese products and inputs into things like automobiles and machinery. And so Mexico is apparently taking steps to address those concerns ahead of time before these talks that are going to get underway between Ottawa, Washington, and Mexico about renegotiating the U.S. and Mexico-Canada trade agreement. So this is all part of a longer-term strategy to appeal to the Trump administration in a way that sets it up to renegotiate a good deal on USMCA.
Yeah. OK, so that's North America. Just get us up to speed on where things actually stand right now with the EU-US trade deal.
Yeah, so the European Union is trying to take some legislative steps to put into effect the tariff decreases that it pledged on U.S. industrial goods as a way to appease America so that it will lower auto tariffs on European exports. They're trying to rush this through to get it done. This is part of the framework deal. But, of course, President Trump recently threw the digital taxes issue into the mix and potentially, threatens a new kind of assault on the European Union's digital regulations, which the European Union has drawn a red line around and said we have sovereignty over this issue and you can't force us to do anything with it. So they're close to getting the framework deal into force, but there are factors that have cropped up that have thrown that into question at this stage.
Yeah. At Bloomberg's trade czar, Brendan Murray, thank you so much for the overview on all things trade and tariff related. Well, coming up, as markets digest Nvidia's earnings, we will explore the AI ambitions of the U.S. as China looks to erode American dominance. So some big picture themes we're going to be discussing on back of these Nvidia earnings, in addition to what we actually got away from these earnings as the stock slips a little bit in after hours, trading down about 2% is the latest. That's all coming next. This is Bloomberg. Good morning and welcome to The Pulse. I'm Joanna Bersetchi in Dubai, and these are your top stories. Nvidia slips in pre-market trading as the world's biggest company signals a slowdown after a 2-year surge in AI demand. Bloomberg learns Mexico plans to raise tariffs on China after months of pressure from President Trump. Plus, India and China move to restore relations after Trump's tariff barrage, with sources revealing details of a secret letter from President Xi to his Indian counterpart. And let's go to our top story. Nvidia reported a 56% rise in quarterly revenue, but a tepid forecast for the third quarter as investors worried that the AI boom is slowing. The self-proclaimed engine of AI is more than just another tech giant. It is key to President Donald Trump's $500 billion Stargate project aimed at leading the world in artificial intelligence. Nvidia's earnings outlook is also a window to the prospects of other tech companies' bets on AI computing. So to discuss the U.S. race to dominate artificial intelligence, some of the big trends in this space, really happy to say that Adrian Cox, Thematic Strategist at Deutsche Bank Research, joins us. Good morning to you, Adrian. Good to have you with us.
Good morning.
Well, as I was just saying in the intro out to you, Nvidia has been the poster child for AI ambitions. Even, it alone single-handedly constitutes 8% of the S&P, right? So you can't overstate its importance. Do you think what we got yesterday out of these earnings is broadly still positive for the AI sector as a whole?
Yeah, so I think, as you say, AI really has become a poster child, but also, to mix the metaphors slightly, I think it's also the canary in the coal mine that everyone is looking at. So there is almost a cottage industry of people trying to seek whether there is going to be a slowdown or even a bursting of this boom that we've seen in AI in recent months. And Nvidia obviously is at the heart of that, because not only is it producing 90% of the key chips which are essential for the most sophisticated AI, but it's also found itself now at the fulcrum of a geopolitical contest which is going on between the US and China. And Nvidia has on its side the fact that, number one, obviously there are the chips themselves, but it also has the software which pumps it up, and also the whole network of infrastructure of clients and of suppliers, which makes it very hard to challenge. But at the same time, if you look at the US has a number of advantages in terms of its ecosystem, but it's not yet there. So China is a very strong competitor in areas that we sometimes forget, like, for example, patents,
I'm gonna ask you,
building its own chips.
Yeah, so I'm going to get there in a second, but I just want to bring it back to something that I picked up on from Jensen Huang's comments yesterday. He talked about $3 to $4 trillion in infrastructure spend over the next decade. How much of that is speculative versus actual investments that will yield a positive return on investment and be positive from an operational standpoint when it comes to the underlying businesses? I mean, how much of that really is going to be able to be monetized is my question.
Yeah, it's a very difficult question. So if you have a look at the amount that the hyperscalers, so the big four companies, are going to spend, it's around $300 or even more billion this year. At the moment, they say that the demand is outpacing the supply, and that is forecast to go on for years to come. And it's not just the demand which is coming from these hyperscalers, but also Nvidia is now broadening that out to other areas. But the more important question really is whether there is life in AI beyond just this sort of focus on data center build out at the moment.
Yeah.
And I would say that yes, there is. So it's a technology which I think is fairly misunderstood at the moment, and because people focus on the idea of it being intelligent, then sometimes expectations run away with reality. But actually, for the companies which are at the center of it, i.e. Nvidia and the hyperscalers, they are actually generating revenue at the moment, which is justifying a lot of that expenditure in a software which is likely to be transformative, even if it were just to stay the way it is at the moment and carry on for several years with us learning how to implement it, how to put it into systems, how to use it more effectively.
Yeah. So interesting. Okay, let's come back to what you were saying about China. And one of the other interesting things that stood out to me from the earnings call was the fact that Nvidia didn't sell any H20 chips into China in the last quarter. But what that has meant is China have had to work on their own ecosystem and build up their own chip-making abilities and achieve some level of autonomy. How do you see that race between China and US playing out in the coming quarters?
Yeah, so there are a number of factors with China and chips, one of which is that they've been able to make use of the chips which they have, which are sort of dumbed-down versions of the most sophisticated chips, and were able then to develop DeepSeek, which is the large language model which really set off concerns back earlier this year about whether it was sustainable, whether the AI spend was sustainable. But on top of that, there have been accusations from US officials that China is able to get chips through the back door. And most importantly, they're also developing their own chips. So there was a report just in the last few hours about China looking to triple its production of AI accelerated chips over the next year. Now, that is an extremely difficult thing to do, and it comes down not just to the chips themselves, but also to the equipment that you use to build the chips. You know, these are $400 billion machines which are being used to create chips. So it's not something that you can just switch on at the flick of a switch. Having said that, though, China is very much leading the way in a number of areas where the US is potentially slightly on the back foot. So while the US has the advantage in, for example, talent and private investment in AI, China has the edge when it comes to government investment, but also actually on research and development. So 70% of the patents that are coming out on AI at the moment versus in 2024 versus 14% for the US coming out of China. So there is definitely a lot of development going on there. And you can see, therefore, why the US was so concerned with its AI action plan in making sure that it can maintain its lead against China and not cede that to its geopolitical rival.
Yeah, really fascinating. I guess then my follow-on question from that is it ultimately a zero-sum game between the U.S. and China? Is China's gain the U.S.'s loss, or are they targeting different clients, different eventual end users?
Yeah, it's an interesting question. And in fact, actually, that is very much the underlying message that you got in the AI action plan, that the US does see this as a zero-sum game. Now, part of the big debate that's happening about Nvidia and also the other US chip suppliers is whether you need to just send them enough in order to be able to, or China and the rest of the world, enough chips to be able to get people looped into that ecosystem, so it makes it hard for them to develop their own competitive offering. And you see on the same side the Chinese reacting to that by saying, well, we want to restrict the use of US chips, or we want to encourage people to use alternatives to domestic alternatives to US chips as a way to avoid dependencies on both sides. But then, of course, there are the underlying dependencies as well, like, for example, the fact that Nvidia is getting its major chips made by TSMC, which is in Taiwan, which is itself the center of not just a seismic, but actually a geopolitical fault with US and China as well. So it's a fascinating area where there are so many different competing elements and possibly unlike any other kind of boom that we've seen in the past.
Yeah, well, difficult to unpack it all in a 7-8 minute interview, but you certainly did your best. Thank you so much for joining us on the show. Adrian Cox, Thematic Strategist at Deutsche Bank Research. Well, July new car sales data for Europe has shown the biggest jump in over a year. According to the European Automobile Manufacturers Association, registrations climbed 5.9% from a year earlier, driven by sales of fully electric and hybrid models. And Ryanair stock dropped sharply yesterday after the low-cost carrier's CEO gave an update on summer demand. Michael O'Leary also says Boeing has accelerated 737 MAX deliveries, with the airline expecting to receive 25 737s between August and October. He spoke to Bloomberg's Sky Johnson.
I think we're reasonably optimistic. I mean, I'm not sure the market is right, but we've had constrained capacity growth this year. So Boeing have left us short of aircraft. Certainly the summer trading has been strong. Forward bookings are about 1% ahead of where they were this time last year. Yep. Last year, fares were down about 7%. It looks like we'll get back most of that 7% fare decline this year. Not all, but I'd be reasonably hopeful we get most of it back during the summer.
Where's the market looking wrong?
I think there's more growth available in the marketplace.
All right, so the market is lowballing.
Fares are recovering this year because capacity is constrained. But there's certainly strong demand for air travel, certainly from the UK to Europe. If I had more aircraft, I think I'd be able to deliver more growth.
Okay, you're going to get more aircraft.
Yep.
You're going to get them from Boeing. You're getting 737s earlier than anticipated, 25 of them you're getting in October rather than 6 months later.
Yep.
Does that mean you increase your passenger targets?
Not in the UK because
Anywhere?
Oh, yeah. I mean, we're growing very strongly.
So you're going to raise passenger numbers because of those aircraft coming
Exactly.
early?
I mean, we will grow. This year, we'll do about 206 million passengers in the year to March 26. Next year to summer 26, we'll grow to about 215 million passengers. So
is that brought forward? Is there any bring forward?
No.
Because you're getting the aircraft early?
No. I mean, we're taking the aircraft early to, if you like, to secure that growth for next summer. The only area where we can deploy those 25 5 extra aircraft will be this Christmas. So there'll be a lot of additional flights in most of our markets, including even in the UK at Christmas. But other than that, no, we'll sit them on the ground until we get to next April.
Are you bringing them in early because you're worried about tariffs?
We're bringing them in early because we're worried about tariffs, but also we're worried something else might go wrong with Boeing. So get them in early. If Boeing, I mean, it's a good sign that Boeing are able to deliver these aircraft early. We want to take them early, so at least we've guaranteed we have them for summer 26.
So your confidence in Boeing is still not that high? You're still worried that things could go wrong?
We should always be worried. You know, the experience with Boeing, but I mean, the very fact that Boeing are able to deliver these aircraft 4 or 5 months early is a good sign that the manufacturing process is going well. I think Stephanie Pope is doing a good job in Seattle, and the quality of the aircraft we're getting, the fuselage out of Wichita, the aircraft out of Seattle, has immeasurably improved in the last 12, 18 months.
Scott Bessent, US Treasury Secretary, has just been on television, and he's criticised Boeing for delivering a massive buyback rather than investing in R&D. Do you have some sympathy for that?
I don't really. I mean, if Scott Bessent wants, what he should be doing is supporting Boeing. You know, one of the reasons Boeing can't make more aircraft is the FAA won't approve the increase in the production rate from 38 to 42. We still need to get the MAX 7, MAX 10 certified. You know, so Scott Bessent should let Transport Secretary Duffy deal with Boeing, get the increase, get the production rate up, and certify the MAX 7 and MAX 10.
That was the Ryanair CEO Michael O'Leary speaking with Bloomberg's Guy Johnson. And coming up, we speak to Chatham's Health's Orysia Lutsevych about President Trump's efforts to end the Russia-Ukraine war and whether they're actually working. That's next. This is Bloomberg. The French Prime Minister François Bayrou says he will negotiate directly with lawmakers next week and has warned against new elections as he battles to stop France's parliament from forcing him to resign. Bayrou says serious discussions must now begin over next month's confidence vote.
Il reste 12 jours, et 12 jours c'est très très long.
There are 12 days left, and 12 days is a lot of talk. I'd set something simple. We haven't opened negotiations because there is a question to ask before negotiations. It's whether we agree on the seriousness and urgency of the situation. And if we agree on the seriousness and urgency, then we open negotiations. We will still have a month before the presentation of the budget. We have plenty of time to look at things. And I said I was ready to examine, measure by measure, as they say, decision by decision, everything we have announced.
Let's get more with Bloomberg's Caroline Conan in Paris. So interesting to hear from the Prime Minister Bayrou. I guess he seems to think that he can win over some lawmakers and convince them not to vote against the government at this confidence vote on September the 8th. The question is, how successful is he going to be?
Yeah, another day, another charm offensive from François Bayrou, this time to the general public opinion on this 8 o'clock news on TF1 last night. He still believes he can make it through September 8th, even though he acknowledged that mathematically it's not looking very good. He says he's going to gather all the opposition parties next week in order to try and convince them that the debt issue is the most important issue of all. He said that every single measure can be discussed, including this proposal of scrapping 2 bank holidays, including taxing the highest earners, including, of course, all the measures that the socialists have said should get out of this budget. At the moment, the socialists have closed the door. They said they will not support this vote of confidence, but there seems to be also a little music going on, including in Macron's camp, about the alternative being new snap legislative elections. The question is, do the socialists really want that? Because, you know, they've broken their alliance with the far left, so some of them might actually lose their seats if there are new snap legislative elections. And last night, clearly, the Prime Minister, François Bayrou, said this will not provide any more stability to France.
Yeah. Meanwhile, the president is doing a little bit of hosting of his own tonight, the Franco-German summit. The Chancellor Merz heading to France. What do we expect out of this meeting, Carol?
President Macron and Chancellor Merkel already spent a couple of days together in Moldova, trying to defend the Moldovan president against possible Russian threats in the next parliamentary elections. And tonight, they're still together. This time, Merkel coming to Fort de Brégançon, the summer residence of Emmanuel Macron. Last time President Macron invited the German Chancellor there was in 2020 for Angela Merkel. So quite a rare occasion. Tomorrow, we're going to have another meeting of the cabinet meeting with 10 ministers from each side. Of course, they will discuss trade, but also defense and security. One elephant in the room, Jumana, will be this next generation fighter jet, the FCAS. You know, this is supposed to be a joint project between France, Germany, and Spain. But Dassault Aviation, the French company, has said they want to take 80% of the work share of this next generation fighter jet, something Germany is totally opposed to. They want broadly an equal share of work. So that's something that's going to be discussed. Perhaps they will make some progress on this topic during this cabinet meeting in France.
Bloomberg's Caroline Conant in Paris. Thank you so much. Well, Bloomberg has learned that President Donald Trump's special envoy, Steve Witkoff, will meet a Ukrainian delegation to the U.S. this week as Kyiv's allies discuss possible security guarantees for the war-ravaged nation. But overnight, Russia unleashed a wave of drone and missile strikes on Kyiv, killing 14 people. Joining me now is Orysia Lutsevych, Deputy Director of the Russia and Eurasia Program and head of the Ukraine Forum at Chatham House. Good to have you with us. You know, there was a lot of optimism and hope, I guess, around the Alaska summit a couple of weeks ago, and then Zelensky's subsequent visit to the U.S. alongside European leaders, that we may see some form of a breakthrough or at least progress when it comes to a peace deal. And yet, as we talk about this, Russia attacks on Kyiv keep going. Overnight, another massive aerial assault. What hope is there really of a breakthrough at this point?
Well, Jumana, you mentioned some optimism or hope around the Alaska summit, but in Ukraine, this event was described as shameful and despicable because in a way, it rolled the red carpet in front of Putin, somebody who is, as you see, nightly bombarding Ukrainian cities, terrorizing civilians without any sign of willingness to either agree to a ceasefire or negotiate in earnest. So in a way, Alaska emboldened Putin to continue his war, unprovoked aggression against Ukraine, while President Trump embarked on this pleasing mission, thinking that if he looks in Putin's eye and if he offers him economic deals, this will be enough for Putin to stop the war. But he forgets that Putin has achieved none of his political objectives, neither vis-à-vis Ukraine, nor vis-à-vis Eastern Europe and U.S. presence in Europe. And all he wants to use the war in Ukraine to split United States from Europe.
Let me ask you a question about land swaps, because that is one of the topics that came up in the run-up to the Alaska summit and also out of it as well. How realistic is it to expect President Zelensky, Ukraine, to cede territory in the Donbass in exchange for firmer security guarantees out of Europe and potentially the U.S. as well? Is that a realistic quid pro quo?
Well, I think this is rather an absurd idea for two reasons. One, you can do land swaps between the territories of Russia and Ukraine. But as we know, Ukraine right now does not control any Russian territory, and it cannot swap its own territory. Secondly, there is an ironclad principle that the borders should not be changed by force. And we do know that Ukraine and its European allies disagree with this principle. And finally, why should Ukraine withdraw from its legal territory to give passage to the Russian army that is torturing, killing, and raping civilians? This would be totally immoral on the side of President Zelensky and is not supported by Ukrainian people. Nearly 70% of Ukrainians are against this idea.
Okay, so do you think the U.S. should be applying more pressure on Russia? And if that is the case, what does that pressure look like?
Well, I think this has been hope from the first days of Trump administration, especially in Kyiv, that he would try to pursue peace through force. So far, we are seeing pursuing of peace, but no force imposed on Putin. So that could be a variety of actions. One, it's secondary sanctions on countries that are buying Russian oil, and we have seen some of it imposed on India through the tariffs. Second, it's supply to more advanced weapons and not limiting the range of missiles that U.S. provides to Ukraine and enabling it to strike military targets inside Russia. And the third one is to actually continue the pipeline of support to Ukraine together with Europe so that Putin understands that he cannot win this war, that the West will not abandon Ukraine, and that Trump will not agree to the list of his capitulation demands that he seemed to be putting on the table in front of Trump, including these land swaps we've discussed.
Yeah. How likely is it that a trilateral summit between Trump, Putin, and Zelensky will actually take place? Do you see that happening?
Well, we do know from President Trump that he would only have a trilateral summit if there is a bilateral meeting that yields some result between President Zelensky and President Putin. At this stage, Russians are putting again on the table requests to Ukrainian side that they know Ukraine cannot accept. And this request is basically that Ukraine should have a limited sovereignty. It should agree, for example, to Russian demands for the right of ethnic-speaking Russian minorities or Russian Orthodox Church, or for the same matter, the size of Ukrainian army. And they keep bringing back demands from the Istanbul meeting. And this is problematic. So it's unlikely that this meeting between Ukraine and Russia will take place at the high level.
Can I just ask you about how you're thinking towards the European response to all of this and the real move to put together a coalition of the willing, become a bit more self-reliant on self-defense as opposed to leaning on the U.S.? Where do you see all of this leading?
Well, Joanna, we see that United States wants to refocus, recalibrate its military assets from Europe to Indo-Pacific to deter and possibly face China in a future war. That means that Europe has to build its own military capabilities to be able to deter Russia and to defend Ukraine. That's why that meeting in Washington last week was so significant, that Ukraine was standing shoulder to shoulder with Europeans, because Ukrainian military capabilities, especially in a new type of warfare, drones, electronic warfare, are very significant and could actually be an asset for Europe rather than a liability. So we see Europe in expanding industrial square production, artillery shells. The Rheinmetall just opened a large factory to produce more artillery missiles. Europe is rearming, but it will take time and it needs a phased out plan for U.S. presence in Europe. And I think Putin knows it. That's why he's escalating right now in order to achieve his objective before Europe rearms.
Yeah. Orysia Lutsevych, Deputy Director of the Russia and Eurasia Program and head of the Ukraine Forum at Chatham House, thank you so much. And as she was speaking, we were showing some live pictures from Kyiv on the back of yet another Russian aerial assault on the city, which has killed 14 people overnight. These are live images from the Ukrainian capital. Up next, Bloomberg Brief. This is Bloomberg.